Good morning, traders. I'm Jill Malandrino, global markets reporter at Nasdaq. And for this edition of Trade Talks, we're going to look at the corporate bond market. Joining me is Steve Shaw. He's the founder of Bond Savi. Steve, thank you for joining us at MarketSite today. And it's a great morning for you to be here talking about the bond market and interest rates as Fed Chair Janet Yellen is testifying.
It is. It's a great time, and thanks so much for having me. What's been really interesting in the market lately is people have been saying, you know what, for years and years, the only way interest rates can go is up. And while the Fed has taken some action on the short end of the curve, the long end of the curve, 30 years and 10 years, rates have actually come down. And when I looked at my portfolio, some of the strongest investment returns have been on the longer dated bonds that I hold.
Do you think investors have shied away from the bond market and looking to other markets for income instruments because of this low interest rate environment?
So if you look at fund flows within bond mutual funds, they've actually remained pretty strong. But where investors have shied away from is owning individual bonds, which I believe is the best way to invest in bonds to drive the highest returns, protect your principal, etc.
Well, tell us about Bond Savi. It's a new site that you just launched.
Yeah, so I just launched it a couple of weeks ago, and what we're focused on is empowering investors to invest in individual corporate bonds. And so we're going to be providing educational videos, and then we provide the monthly Bondcast, where I'll be making specific investment recommendations for people that they can act on. So I'll narrow down the universe of thousands of bonds to a handful that people can say, all right, I'm comfortable with this risk, or I'm more risk averse, I'm more comfortable with this bond, to make it so people can have digestible information that they can use.
Well, in Trade Talks, we typically talk about equities and options, but we really don't dive into the corporate bond market as much. So can you explain to us what are some best practices for retail investors when they look to purchase corporate bonds?
So I would say is first, start in an area that you're comfortable with. So I've spent most of my career in telecommunications and media, financial services, and that's generally where I focused. I don't have experience in energy, and so I've stayed away from those bonds, and thankfully I did last year because half of the defaults were from the energy sector. I would also suggest that if people are just starting out investing in bonds, that you make a handful of investments. So perhaps you invest in a couple of investment grade credits, a couple of high yield credits, different duration, and then check up on your investments every month and see how they've done. And what will happen is over time you'll get an idea in terms of how the market really works.
It's really interesting. It almost sounds like equity recommendations where you want to keep it relatively well diversified in different time periods and so forth for your strategy. So and follow the sectors that you're most comfortable with. So it kind of sounds like the equity and bond markets, when analyzing them, they have a lot of similarities to it.
Yeah, the other thing to realize is that oftentimes people think, you know, the bond market, the returns just aren't very exciting. Well, last year my high yield investments drove a 31% annualized return. And so if you're able to pinpoint the right investments, you can drive strong returns, and sometimes they can be equity-like returns.
Right. So why not just invest in a bond fund or a bond ETF relative to individual corporate bonds?
Right. So bond funds lack the many advantages of individual bonds. And the first two most important are return of your principal and payment of a fixed coupon. And the biggest thing that they lack is your ability to be selective and drive the highest returns, because bond funds have to put so much money to work. They have to put billions of dollars, and so they basically buy the entire market. And think about it. If you're putting a team together, would you rather have the 10 best players or the 500 best players? I would always rather have the 10 best players, and that's where I've seen success investing in corporate bonds.
Can you give us an example of a corporate bond that you either own right now or one that you're bullish on?
Sure. So I've owned Microsoft 4s of 2055. And you would think Microsoft, so these pay a 4% coupon with virtually no credit risk. How could you ever make any money in that? But I've held these bonds for about 2 years, and they've generated an 11% annualized return. And it's those types of opportunities where there's virtually no credit risk, but you can still make a very strong return. On high yield land, I've invested in Cablevision bonds, when 5875s of 2022, that have returned 27%. It's all about picking your spots in corporate bonds.
All right. Well, thank you very much for joining us at the MarketSite. And traders, as always, thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.